So in this section, we will look at global interest rates. So this is chart number 31. The US 10-year bond yield is a daily time frame. Again, I have drawn the MACD here. Question number 1, spot the bearish divergence on this chart. Question number 2, is that a perfect example of a bearish belt hold line and why? So this candle. Number 3, why does this candle suddenly gain importance as we draw the angled trend line? So this is the angled trend line. And why is this red candle important? Number 4, does that candle complete a bull harami and why? So this green candle. Number 5, why is this candle very bullish in the context of this chart? So this green candle. Number 6, why is the high of this candle important? So this one. Number 7, why would you not be surprised with the price turning up from here? So from this area. So spot the bearish divergence on this chart. So if you look at the price movement from here to here, the price has gone up. But correspondingly from here to here, the histogram has gone down. Plus you have the critical condition, which is the red histogram level. So the histogram has dropped below the center line before these two peaks. So when the price goes up and the histogram goes down and the histogram crosses the center line, that's a bearish divergence. Okay? And look what happened after the bearish divergence. It's very important. Is that a perfect example of a bearish belt hold line and why? It's not a bearish belt hold line. It looks like a bearish belt hold line, but it comes after a uptrend. You should have a bearish belt hold line somewhere here. That is not the case with this candle. Number 3, why does this candle suddenly gain importance as we draw the angled trend line? So I have drawn this angled trend line by joining these 2 points, this low and this low. And this black candle finally breaks that trend line. And this red candle confirms that break. So we would expect that this was a false breakout and the next candle would close above the trend line. But that doesn't happen. In fact, this candle is testing that. So it's like old support becoming new resistance, right? Change of polarity. So suddenly that candle attains importance because it is very bearish. It is making that angled trend line as resistance. Number 4, does that candle complete a bull harami and why? I don't think so, because if you measure the real body of this candle is not less than 20 to 25% of the real body of this red candle. So I don't think that's a strict bull harami, although you'll have to do some measurements here. Number 5, why is this candle very bullish in the context of this chart? Well, you look at the context of this chart. Number 1, you have almost a bull harami here. Almost I am saying because I have not measured it properly. A bull harami is a bullish pattern and that bullishness is confirmed by this bullish engulfing pattern, right? So that is the reason why the candle is very bullish in the context of this chart. Okay? Number 6, why is the high of this candle important? So if you look at this candle, it satisfies the criteria for a long black or red real body. It opens near the high and closes near the low. So the high of this candle is most likely to become what? It is most likely to become resistance. Number 7, why would you not be surprised with the price turning up from here? So I would not be surprised when the price turned up from here, because if you look at this candle, it satisfies our criteria for a long white real body. So you draw this line. That's a 50% level, right? And that's the low. The low of that line becomes support. So at that, between that support zone, the price has chosen to good turn up. So that's why I would not be surprised to see the price has turned from here, because this candle is a very important candle. So this is chart number 32. This is the Japanese 10-year bond yield, and this is a weekly time frame chart. So as you can see, the blue line, I have drawn a exponential moving average. This is a 12-period exponential moving average. Question 1. If you went short on this candle and used the moving average as your resistance, then on which candle would you close the trade? So this red candle. Number 2. If you went long on this candle and used the moving average as your support, then on which candle would you close the trade? So this green candle. Number 3. Is that a star or a high wave candle? Why is it an important candle in the context of this chart? So this one. Number 4. Can you spot the falling of the roof situation on this chart? Number 5. Would you go short on this candle since it is confirming the break of the moving average from the previous candle? So this small green candle. Number 6. How does this candle prove that the moving average is a lagging indicator? So this green candle. Number 7. Does this candle complete a 3 white soldier pattern? So this one. So if you went short on this candle and used the moving average as your resistance, then on which candle would you close the trade? So let's say you went short on this bearish engulfing pattern, and the next candle the price crosses that moving average, and if you use that moving average as your resistance, then you would wait till the price would close above that resistance. So on this candle, the price has closed above that moving average. So if I went short here, I would exit on the close of this candle. Number 2, if you went long on this candle, so if you went long on this green candle and used the moving average as your support, then on which candle would you close the trade? Similar question. So after a couple of candles, you see that the price has crossed that moving average. So that moving average is now acting as a support, and this candle breaks that support. If you went long here, you would exit at this candle. That's a nice up move, right? Number 3, is that a star or a high wave candle? Well, it is both a star and a high wave candle. Why is it an important candle in the context of this chart? It is an important candle in the context of this chart because if you look at these two vibrant white candles, suddenly you have a star, suddenly you have a small real body after two very strong green candles, right? So after a long downtrend, you have two very strong candles and suddenly the market stops here. Moreover, if you were to draw a line here, that support is likely to be So this is chart number 33, the British 10-year bond yield and daily time frame. Question 1. Explain the false breakout scenario on this chart. For hint, I have drawn this pink color line here. Number 2. Would you treat this candle as a hammer and why? So this one. Number 3. These candles are confirming two different supports. Which ones are they? So these candles are confirming two different supports. Number 4. What should you do when you see a shooting star completing a rising window? So this one. Why is this candle important in the context of this chart? So this red candle. Number 6. Is this candle a false breakout? This green candle. Number 7. Does this candle complete a bear harami? So this small red candle. So explain the false breakout scenario on this chart. Again, this is a trick question because if you look at this line, that's not a false breakout, right? That's a false break. So if you draw this line, so let's say we take this low. At this point, it becomes a multi-tested support. So this candle, it fails to break below that line. It just closes at that line. So that's the third step. It breaks. And within a couple of candles, the price is back up above that support level. So that's a false break. So you could choose to go long on this small candle and put your stop loss here. And just look what happens. That's the power of the concept of false break. People underestimate this concept. It's very, very powerful. As I explained to you in one of the levels, I think it was level 4. First, you draw the support line. So you take the low. Step number 1. Step number 2 is a successful test. So that's a multi-tested support. Step number 3 is that you have to break or break out. So in this case, it's a break because it is not closed below the line. So this is step number 3. That's a break. And within 2 candles, 1, 2, the price is back up above the support, multi-tested support line. So that completes step number 4. So that's why you buy on that candle, put your stop loss below this candle, and then just ride the trend. Okay? So that's a false break. It's not a false breakout. That was a trick question. Number 2, would you treat this candle as a hammer and why? Well, not strictly. If you measure the lower shadow, I think it is almost 2x of the height of the real body. But it's very close, right? If this shadow would have been slightly longer, then there is no need to measure at all. It's very obvious to the eye that it's more than twice the height of the real body. But for this candle, I think you will have to properly measure that, make that measurement. So if you are required to do some measurement on a hammer, then it's not a hammer. Okay? When in doubt, don't trade. Always remember that rule. When in doubt, do not trade. So I would not consider this candle as a hammer because it's not very obvious. You will have to do some measurements here. Number 3, these candles are confirming 2 different supports. Which ones are they? So, of course, the first support is this pink line which I have already drawn. The second support is this candle, right? This candle satisfies our criteria for a long white or green real body, and we know that the low of that candle becomes what? Support. You draw that line. See, all of these candles are respecting that support as well. Number 4, what should you do when you see a shooting star completing a rising window? Again, this is a big question. When a shooting star completes a rising window, it means that you have a support area here and you have a resistance area here. So the price is likely to get sandwiched between the 2 levels. So what should you do? You should do nothing because the price is most likely to get sandwiched, and look what happened on these two candles. Of course, the price is sandwiched between the two levels, the resistance and the support. Number 5, why is this candle important in the context of this chart? Well, the answer is very obvious. This candle is completing what? It is completing a rising window. And after completing a rising window, you would expect the price, the candle to be green, right? Because the bulls are very powerful on that candle. Then why is it that this candle is red? It means that the rising window shows bullishness, but the candle itself shows bearishness. So there is confusion in the market, right? That is why that candle is important in the context of this chart. It is giving some conflicting signals, so you don't know exactly what to do. You can't just buy on that candle. You can't buy on the red candle. Number 6, is this candle a false breakout? The answer is no, because for a false breakout, you need a multi-tested support or multi-tested resistance. In this case, you have this resistance, but it was not tested again. This candle tried, but it not even touching the resistance line. So it was a direct breakout of that resistance. So it's not a false breakout because this line is not a multi-tested resistance line. We need a multi-tested line, something like this. Number 7, does this candle complete a bear harami pattern? So, of course, just because the two candles are red in color doesn't mean that it is not completing a bear harami. Of course, it is completing a bear harami. The color does not matter. So this is chart number 34, the German 10-year bond yield, weekly time frame. Question 1, would you go short on this candle and why? This candle, I have drawn a pink line here. Number 2, does this candle satisfy all the criteria for a 3 white soldier pattern? So this one. Number 3, why would you hesitate to go short on this dark cloud tower? So this one. Number 4, what would make this candle a dragonfly doji? This one. Number 5, what would make this candle a gravestone doji? This one. Number 6, why does this candle gain extra significance in the context of this chart? This green candle. Number 7, what are these two doji hinting at? So these two. Would you go short on this candle and why? So it's a shooting star confirming prior resistance, which is good, but I would not go short on the candle because of the reward to risk ratio. If I look at this level as the support area, because at that level the price aggressively moved up. Number 2, does this candle satisfy all the criteria for a 3 white soldier pattern? The answer is no, because for a 3 white soldier candle, we expect all of the 3 candles to open near the high and open near the low and close near the high. But since you have this long upper shadow here, it does not satisfy the criteria. Number 3, why would you hesitate to go short on this dark cloud cover? The answer is simple, right? It's not confirming the resistance of this shooting star. Number 4, what would make this candle a dragonfly doji? Well, a dragonfly doji does not have an upper shadow. So if this candle did not have a upper shadow, the price had closed like this. That's a dragonfly doji. What would make this candle a gravestone doji? So a gravestone doji does not have a lower shadow. So if this candle was like this, that's a gravestone doji. Number 6, why does this candle gain extra significance in the context of this chart? So if you look at this candle, it's a bullish engulfing pattern. Most importantly, you look at this candle, that's a hammer, right? If you draw line at the low of the hammer. This bullish engulfing pattern is confirming the prior support area created by the hammer. That is one reason that candle would gain extra significance. Another reason is, you look at this 1, 2, 3, 4, 5, 6, 7, 8. After 8 red sessions, you have one green session. So that tells you something about the market, right? Number 7. What are these two doji hinting at? So I would not pay much attention to these two doji, because after the price started to fall from here, the market just stabilized here and then went down, right? So these two dojis are appearing in a kind of a box range. So a doji that appears after a box range, we don't pay much attention to those doji. This is chart number 35, Switzerland 10-year bond yield, and this is a daily time frame. Question 1. Does this candle have a strong opening price and why? So this red candle. Number 2. Does this candle have a strong opening price and why? This green candle. Number 3. What is the importance of this candle in the context of this chart? So this red candle. Number 4. Spot a perfect tweezer's bottom on this chart. Number 5. Is that a tweezer's bottom? Why? So this one. Number 6. What would have caused you to go short on this candle? Again, this red candle. Number 7. Why is this candle important in the context of this chart? So this red candle. Does this candle have a strong opening price and why? The answer is no, because if this candle had opened below the midpoint of this prior green candle, so for example it had opened here, then it would be a strong opening price. Number 2, does this candle have a strong opening price and why? Of course, because it is opening above the midpoint of this prior black candle. Number 3, what is the importance of this candle in the context of this chart? So first, if you look at this candle, it's completing what is called as a bear separating line. And it's also a variation of a bearish engulfing pattern. It's also you would call it a bear sash pattern as well. However, if you look at these two candles, that's a last engulfing top, right? And this candle is confirming the bearish implication of the last engulfing top. That is why this candle is important in the context of this chart. Spot a perfect tweezer's bottom on this chart. So you look at these two candles, 1, 2. Both have the same low, so that's a tweezer's bottom. Why is it perfect? It's perfect because the first candle is tall and the second candle is very small candle. Third reason, the second candle is a hammer. Okay? So that is why it's a perfect tweezer's bottom. Is that a tweezer's bottom and why? So in this case, if you look at this, that's a variation of a tweezer's bottom. Variation because for a tweezer's bottom, the first candle needs to be a tall real body. Number 6, what would have caused you to go short on this candle? So this candle does not complete a dark cloud cover. However, if this candle had confirmed some prior resistance, so like this. So what happens is when a candle opens above a resistance but fails to hold above that resistance and closes back below the resistance, that's a very powerful bearish sign. So even though it is not completing a dark cloud cover, I would still take a small position on that candle. I would go short on that candle. Number 7, why is this candle important in the context of this chart? So if you look at this candle, observe carefully to the left-hand side of the chart. If you see these two candles, there is a rising window here. So if I draw this line, see, none of these candles is able to break that line. But this was the candle that finally broke the support created by the rising window. That is why this candle is important In the context of this chart,